What's the cost of the margin
The co-
to carry?
the cost
The,
of
the,
the cost of the margin for silver is $9,300 per contract. Okay. Now, if that's why I said to Bobby, I said if he had $100,000, I'd use 50 of it. I'd keep 50 in reserve. I'd use half of that 50 trading T bonds, probably 10-year Treasury notes, and then selling calls against those. And I would use half that margin, $25,000, half of the 50, to buy silver. And I wouldn't buy 3 contracts because that would be 27,000 of margin. I would buy 2 contracts. That would be using 18 of the 25. But that other 50 would be in reserve, that we never even touched. And after 3 years, the silver, well, depending on where the bonds go, but I think silver can. A year and a half ago, silver was $30. Silver's under 20 right now. I think silver could easily be 25 or $28. And as I say, it's 100% return per contract per $2 at today's margin rate. Now the margin has been higher. The margin was 15 grand for a little while, and the silver margin did go up recently. It went up to $9,300 from $8,250. It went up $1,000 in the last 3 weeks, I believe, something like that. But there's covered calls are a nice way to trade, folks, to get a little bit of edge on the market. The only thing is the call options will pay nicely on the high beta stocks like Disney or Tesla or Apple or something like that. But for your everyday given, S&P 500, they don't pay very well.
Hey, Jim,
Go ahead.
do you like covered calls?
I really like covered calls. I think it's a nice way to add to your winnings and protect your losings. Protect your losses. If anybody has any questions about it, I'd love to try and answer
So
questions.
Jim, wait, you do this, who do you do this for?
Our futures commission merchant is RJ O'Brien, and my brokerage company is Allendale Incorporated in a suburb of Chicago.
And what's the worst performing year you've had with this strategy?
I didn't hear the question. You cut out a little bit.
What is the worst performing year you've had with this strategy?
I can't talk about, it's kind of a hedge on my part, but I can't talk about other people's tradings or my own trading.
Got it.
I can tell you
Well, what about a guy you know?
I can't tell you. I can't talk to you about clients. It's an ethics violation.
No, I understand that. I'm not.
All right. So what I can tell you is
So
that
you guys don't publish track records.
Yeah, if we were to model back 8 quarters.
If I was a certified trading advisor, I would have that information published, but I'm not. I'm a futures broker, an independent for speculators and for hedgers, futures broker since 1986. Okay, so I can lay out.
You're just getting warmed up.
I can lay out the risks and I can tell you the profit potential. And then for a client that's a new client, if they're interested in limiting their loss, we sell a call and that limits their loss for the amount of premium that you collected on the call. And then if the client chooses, they can put in a stop loss order as well.
But is the margin, and this is just a question. I mean, I don't deal with this as much, obviously. But is the margin based on the perceived volatility? I mean, how do they set the margin? Is it reset every single options period?
Exactly right. The margin is based
right now it's a good trade, and it has been. But if silver prices were to tank, that margin would double or triple. Is that accurate?
No, sir. The silver trade has not been a good trade. I believe it is a good trade going forward. The silver down from $27.80, like in March or April of this year.
That was my thought.
Okay.
That's what I was so confused about.
From, let's say, $28 came down to $19, $18. Okay. It has bottomed out. The low, if you look at a silver chart, the low was September 1st. Okay. Yeah. And we went up about $4 from that low. And then we came back about $2 or $2.50 of that. So I think the way I view risk reward, or how I analyze risk reward, is what's the potential downside versus the potential upside. I think silver has $2 to $4 upside in the next 3 months. And in the next 6 months, I think it could go up back to $26, $28. And downside, I think it's got a $1.50 downside.
And basically, that's an industrials play, right? I mean, silver is typically an industrials play with China coming back online.
Industrial and monetary metal and investment metal now. Okay,
so yeah, but silver drives industrial drives the volatility. Right?
70%, and the investment side is about 25-30%.
Okay,
but it's all timing. Which way you're going to trade? First, you have to pick out the futures you want to trade, then the month. And then you got to decide which way you want to trade it. In futures, you can make money if something goes down first by selling it first, and then you decide when.